One of these made the average investor rich, and the other made most people quit investing forever. Right now, you are standing at a fork in the road that will determine the next 30 years of your financial life. On one side, you have the slow, steady, and almost boring path of index funds. On the other, you have the high-octane, adrenaline-filled world of individual stocks. By the end of this video, you will know exactly which one fits your personality and why choosing the wrong one costs far more than just bad timing. We are going to look at the legendary wisdom of Warren Buffett versus the flashy screenshots of overnight traders. No hype, just numbers, psychology, and real outcomes. And stick around, because I am going to reveal the one rare situation where individual stocks actually beat index funds. But it is not what you think. The choice between these two strategies is the most important decision you will ever make for your wealth building journey. This isn't just about picking numbers on a screen. It is about your retirement, your freedom, and how much of your life you are willing to trade for a percentage point. Most people do not lose money because they pick bad investments. They lose because they pick the wrong strategy for who they are. They try to be a day trader while working a 40-hour week, or they buy an index fund and then panic when it doesn't double in a month. This isn't beginner advice versus advanced advice. This is reality versus fantasy. If you get this choice wrong, you aren't just losing money, you are losing the one thing you can never get back, which is time. Let's talk about what an index fund really is without making it sound like a dry textbook. Think of an index fund as owning the entire forest instead of betting on one specific tree to grow the tallest. When you buy an index fund, you are essentially saying that you believe in the future of the economy as a whole. You're taking a seat at a massive buffet where you get a little bit of everything. If one dish is spoiled, it doesn't matter because there are 500 other plates to choose from. In a sports analogy, you aren't trying to guess which rookie will become the next superstar. You are simply buying the entire league. Index funds offer automatic diversification, which is the only free lunch in the world of finance. They come with incredibly low fees because there is no high-priced manager trying to outsmart the market. Most importantly, they eliminate decision fatigue. You don't have to wonder if you should sell Apple to buy Microsoft. You already own both. But remember, index funds aren't safe in the sense that they never go down. They are just forgiving. They allow you to be wrong about 100 different companies and still come out ahead in the long-term investing game. So why do index funds win for the vast majority of people? It comes down to the brutal reality of historical performance. Over long periods, the market has a relentless upward trajectory. While individual companies rise and fall, the collective market has survived wars, recessions, and even global pandemics. When you invest in an index, you are riding the wave of human innovation. The compounding effect over decades is where the magic happens. A few $1,000s can turn into a small fortune, not because you were a genius, but because you were patient. Even the professionals struggle here. Year after year, data shows that nearly 90% of professional fund managers fail to beat a simple S&P 500 index fund over a 15-year period. These are people with Ivy League degrees and supercomputers, yet they are being beaten by someone who just sets up an automatic deposit and goes for a walk. The reason is simple: fees, emotions, and overtrading. The best strategy is often the one you don't sabotage. If index funds are so good and so consistent, why do people still try to beat them? And this is where the seduction of individual stocks begins. This is where logic ends and ego takes over. We have all seen the stories. We've seen the person who bought Amazon in 1997 or Tesla in 2012. We see the highlight reels on social media of people making a year's salary in a single week. Individual stocks offer something an index fund never can: the feeling of control and the dream of the jackpot. You aren't just a passive observer. You are a hunter. You are looking for that one company that will change the world and your bank account simultaneously. The appeal is intoxicating. You can tell your friends you found the next big thing. You can see your portfolio jump 10% in a day while the rest of the market is flat. But the reality behind those screenshots is often a graveyard of failed bets that nobody talks about. Individual stocks have merit if you have the appropriate mindset. The upside is clear. Investing in a company correctly can lead to life-changing wealth faster than an index fund. Diversification preserves wealth, whereas concentration creates it. Choosing stocks forces you to understand businesses, watch cash flows, competitive moats, and management teams. The approach is more entrepreneurial than standard investing. Successful individual stock investors are long-term thinkers in a short-term world. They have low emotional sensitivity and will look stupid for years while proving their argument. It takes a lot of effort and attention to detail. Even though it's part-time for money, it's a full-time brain job. However, we must discuss why most individuals lose at picking winners. Not the market, but the mirror is the biggest enemy. Overconfidence makes people think they know more than others. This leads to hype-driven bubble purchases. When prices fall, panic selling ensues. People follow their stock prices every hour, every day, allowing headlines affect them. This emotional roller coaster is taxing. Time is also expensive. If you spend 10 hours a week researching stocks and only match an index fund, you performed a second job for free. Most personal investments underperform the market because they are emotional rather than rational. Why does it feel like everyone else is winning while you're simply keeping up? This is a temperament decision, not an intelligence one. Take a short personality test to determine your place. Ponder these questions. Do you like research or just the results? You shouldn't pick stocks if reading a 100-page annual report sounds terrifying. Can you endure a 50% decrease in one hold without losing sleep? 50% drops are global disasters in index funds, but they happen all the time in individual stocks. Do you like simplicity or control? Some feel safer knowing what they own, while others feel better owning everything. Builders versus hunters. Builders aim to build a fortress 1 brick per day. Hunters seek the biggest catch, even if they return empty-handed. If you're torn between the two, smart investors adopt a third option they rarely admit: core satellite approach. This is the best hybrid stock market strategy. You invest 80 to 90% in broad-based index funds. Your foundation. It is boring, but ensures you will be okay if you are incorrect about everything else. Then you pick equities with the remaining 10-20%. Scratches the itch. It lets you enjoy market excitement without compromising your future. It minimizes risk while allowing you to participate in moonshots. This only works with stringent rules. You cannot transfer money from your core to your satellite due to a good feeling. This method helps you stay disciplined and entertained over time. Finally, the verdict. Who wins long term? Index funds dominate mass wealth building. They are the most guaranteed financial independence road ever. They eliminate guesswork so you can focus on life instead of your laptop. However, individual stocks aim to improve your life. They are a high-risk bet for individuals with time, desire, and volatility. The approach you can stay with for 20 or 30 years is the real winner, not the one with the best potential return. A perfect strategy abandoned during a crash is worthless compared to a mediocre strategy followed through. Now more than ever, it is essential to be truthful with yourself. Constructor or conquest? Are you looking for excitement or results? You should not worry about your ego or the amount of effort you put in. It is only for those who have a plan and the discipline to follow it. Index funds are quite reassuring to investors. Investing in individual equities can be challenging. If you are aware of the reason you are there, either one can be successful. Who are you and why do you say that? Are you able to feel confident in your ability to control the market, or do you feel as though you are losing money because you are unable to pick winners? In the comment section below, please share your index fund, stock, or hybrid investment approach. Take this choice with caution because it will determine the course of your financial destiny. We appreciate you watching. The day before yesterday was the best time to begin, but today is a close second. Maintain concentration and allow time to work for you.